And welcome. This is Mary Ellen McGonigal here with your Friday afternoon MEM Edge show, and the show where we bring you where the price action is in the broader markets. Certainly, I would argue we had a very pivotal week last week, and we will get into that as we move through, taking a look at these broader markets and beyond this sector rotation that is continuing to develop. First up, quick look at the headline news that drove price action last week, all about reduced inflation with those core CPI and PPI data points that were released. Most impactful were Fed Chair Powell's comments after the FOMC meeting. And at that time, he did signal that the Fed is likely at the end of their rate hike campaign. Great news there. Also, it was cited the possibility of rate declines and cuts into next year. So very, very bullish backdrop for the broader markets. We're going to take a look at the impact there relative to that. Certainly front and center was a drop in interest rates, and we'll look at that as well. So from here, let's go ahead and take a look at those broader markets and see where did we close for the week. And here we are with a daily price chart of the S&P 500, which gained about 2.5% last week. Let's take a look at some of these momentum metrics and the price of the S&P, where it closed relative to these key moving average. Net, we are in a very nice confirmed uptrend. However, when we look at this RSI, it is in positive territory above 50. It is in an overbought position above 70. And if you go back historically, taking a look at this and other broader market indices, an overbought RSI is not common. So when it does take shape, you do want to take note, have a plan in place, because inevitably that overbought position does imply at some point, at the very least, a pause and many times a pullback. And we can take a look at precedents here in June and then again in July. And we did have a very slight pullback here in June, a more pronounced into a correction into August. So a couple of key differences here. First, front and center is the fact that interest rates were rising during that time period, but also other technical differences that I will review further in my MEM Edge report. So tune in to those of you, and I want to thank you for being subscribers to that twice weekly report. Let's go ahead and take a look at the Nasdaq Composite. It fared a bit better than the S&P 500, up 2.9%, and take a look. That RSI also up here in an overbought position. We did have a nice base breakout into a confirmed uptrend here for the Nasdaq. And here again, I'm signaling those characteristics of when we do have a more pronounced pullback in a broader market indices, but net, both broader market indexes are in a nice confirmed uptrend. Let's go ahead from here and take a look at those 11 underlying sectors. It's really critical. I know I mentioned this, but it does bear repeating that you do want to get that sector and then that industry group correct. I worked for many years directly with Bill O'Neill, founder of Investors Business Daily, and in his many years of study, it was uncovered that getting that sector and industry group correct as far as stock selection, that accounts for almost 50% of your price improvement or deterioration is going to depend on what sector and group it's in. So let's go ahead and with these 11 sectors, I've added an RSI. It is sorted in descending order and not whippy. This is a movement that progresses. In essence, you're on the lookout for areas in this bottom quartile as they progress up here to the forefront. Likewise, sector rotation toward weakness is going to be groups up here that are trending lower. So let's take a quick look at these areas that are up here at the forefront. And what will be revealed rather quickly is the fact that we do have a couple of factors that is driving movement and demand for stocks in particular areas. If we look at industrials, and I can cite also at consumer discretionary, an awful lot of the movement here has to do with that lower interest rate, lower mortgage rate, and hence the higher demand in home building stocks, and then also in companies that provide products to those home builders, whether it is heating units and so on. So lots of dynamics taking shape there, of course, driven by a reduced interest rate environment, but also improved growth outlook. Moving along, taking a look at XLF, this is another area that is benefiting from a reduced interest rate environment. We'll get into that in our next segment as to which area in particular, but also these large money center banks are benefiting as well. There is anticipation with what people are terming a soft landing, where the economy remains upright. It's not growing too fast, but certainly it is in a growth mode. There is anticipation for continued investment banking needs for IPOs and merger activity and so forth. So let's go ahead and move forth. XLRE is going to be REIT stocks. And in this area, again, another area that really improves and fares well in an interest rate declining environment. As many of you may recall, I did bring this downtrend reversal to your attention 2 weeks ago and cited three different REIT stocks that looked attractive. But at the end of the day, there is still further upside potential here with this particular industry group. Again, with these lower interest rates, these REIT companies are better able to expand their portfolios by borrowing at a lower rate. Also up here is technology, not quite at the forefront. It is an area that sat out. This is XLK toward the end of November into the beginning of December. We are seeing a reacceleration of movement back into the technology sector. It did perform just a bit above the S&P 500, and a lot having to do with the heavyweight names that are a part of this tech group, Apple and Microsoft to be precise, which were averaged out being flat for the week. Does not mean there's not a lot going on beneath there. We'll get into that. And then let's go ahead and look at some of these newer areas as well here with XLB, another downtrend reversal. This was one of the top industry groups this week, up 4%. A lot of that having to do with, take a look at today's gap up, actually yesterday's gap up. And what you will see is a move into a base breakout. A lot of this having to do with China reporting mixed economic data. However, the Chinese government is flooding liquidity into their markets to support the economy, and a lot of those steel and other big building related names in the materials group on the move higher. Now, of course, again, you do want to be aware of these areas that are down here in this lower quartile. Energy continuing to suffer, the price of oil down, the dynamics just not there for these energy names to really excel. And then utilities and staples down here at the bottom, as we are seeing a less defensive nature take over in light of a reduced interest rate environment. So here we are with another view, and this is going to have us drilling down quite a bit beyond those sectors. I use very critical ETFs that I find to be very useful as far as embracing and understanding, again, where is that relative outperformance so that you can participate in that. First up here is XHB. This is the S&P Homebuilders ETF, and you can see this sharp advance that has taken shape here. This is an area that my MEM Edge report subscribers, we got into back here when I added new home building stocks to the suggested holdings list. But take a look. I believe there is still much further upside for this group. And again, I will share that in my report that comes out on Sunday. From here, let's take a look at some of these other areas here that are in that growth mode. Next up is semiconductor stocks. I use SOXX, that ETF, and we can see this sharp advance higher. This is having a lot to do with really increased earnings from a number of companies that are continuing to release their reports. Also, we are seeing a bit of a pivot away from certainly NVIDIA. However, the two bellwether names that have really outperformed this week are the two that are on my MEM Edge report. We can take a quick look, all very much news driven. This is Advanced Micro, AMD. They came out with news where they introduced their new suite of AI related products, and the growth prospects are very strong. Another name on my suggested holdings list is Broadcom. The company came out with earnings after the close here, and we can see the nice advance into an uptrend that's taking shape. And these are certainly well-known names within the semiconductor space, so well worth noting that we are seeing follow-through rally among other names in that group. As we take a look at some of these other sub-industry groups, let's go ahead and look at one area that most people might not be drawn to initially, but it is very much worth a close look. And in this case, I'm using the ETF RSP, and this is the equal weighted S&P 500. Now, I talked about the S&P gaining 2.5. Let's go ahead and pull up a weekly here, and you will see that the equal weighted did gain 3.9%. So this is good news, bullish. We are seeing a broadening out of the markets beyond those mega cap names that are heavyweights in the broader market indices. Moving through, we can take a look at regional banking, KRE. Now, I did talk about the financials on the move, up 3.4% in this reduced or lowered interest rate environment. And here we are with these regional banks. This is another area that I did get subscribers in on this downtrend reversal. We have several leading names on that MEM Edge report, but the point for today is let's take a look at the weekly, and we can go back historically. Coming out of this bear market period was a very good advancing period for these financials, a lot having to do with the backdrop of fundamentally their balance sheets being in good order. So if we look at this advance taking shape here, it does have a lot to do with lower interest rates and the impact of potentially more lending activity. But there also is a consensus among many Wall Street firms that these banks have recovered from that banking crisis period. And so we have two drivers that look to be moving these banks, which appear headed higher from here. Moving along, we can look at biotech names. A big week last week. I'm going to be sharing with you a couple of names here in the biotech space, a couple of well-known names that did get FDA approval or had their particular product advanced through clinical trials. So this is another area that is good news. And again, when you're looking at these downtrend reversals because of this broadening out, we're seeing a lot of new areas come into play. I find it very helpful to then revert and convert to a weekly. You want to have a good sense of what a true longer term downtrend advance looks like. And on IBB, which is the ETF that I use, it's a faster growing Nasdaq biotech ETF. But take a look. We have this black line up through the red, MACD crossover, positive RSI, but we're not in positive territory quite yet. I would not load up the boat, but you can see that we certainly had very bullish dynamics last week into those biotechs. And down here in this lower quartile are areas that are weak at this point, but had a good period last week. This is the medical devices ETF, up 4.3%. We have now advanced above this 200-day simple moving average, and another area with a downtrend reversal and definitely further upside anticipated there. Retail's XRT, I did talk about retail sales. This particular group was up 5.8%. And a lot of the growth here is going to revert back to the home construction, new home sales, where a lot of home furnishings and companies that provide home improvement on the move quite a bit higher. So that's a look at the broader markets, and beneath the surface, I did have one other area that I was hoping to share with you. I do not see it here, but I will urge you to take a look at it. Actually, we can look certainly at the QQQ. I'll go ahead and pull up a longer term here, and you'll see that we this week hit a new high with the QQQ. And I would urge you to take a look at the equal weighted Nasdaq. And there again, you will see relative outperformance that again is signaling a broadening out beyond just those Nasdaq 100 names. And I'm going to share with you some of the names that are within that equal weighted that are contributing to the nice move there. First up, and this the Nasdaq actually has over 3,000 stocks in it. So essentially, I chose names I wanted to share with you that are not entirely tech driven. They certainly will have, of course, in this environment, some tech component to them. But first up here is Comcast. Caught my eye because of this downtrend reversal that took place. We are now back above this key 50-day simple moving average, your shorter term 10 and 21-day moving average now crossing above that 50-day, indicating a golden cross. We did see nice high volume on the rally this week. And then today's super high volume bar was buyers coming in on the small pullback. So all very constructive from a chart perspective, this MACD just entering into positive territory. But of course, you want to know what drove that price action, at least from my work. I want to know, is there some backdrop fundamental shift that could contribute to a potential continuation rally? And sure enough, the company last week did release their Xumo streaming box. Their Xfinity Internet division has released that at no charge so that individuals can very quickly access their live streaming or otherwise streaming material very quickly. It was very positively received. Taking a look at another area that is, I would say, outside of technology, but I will also add that they use technology very actively as far as acquiring new users and subscribers. This is Booking Holdings, and we are not early by any stretch. Let's go ahead and mark this up very quickly because Booking Holdings does allow individuals to book their travel, and most is going to be lodging related. But let's take a look at this flat base breakout that has shaped up here. And this is an area you can look at not only the company that allows you to book, but a number of hotel and lodging related areas are on the move higher. A lot of this after Q3 data pointed to the fact that consumers are spending still and did in that third quarter quite a bit on traveling. So when we are looking at a stock that has already broken out and is in a nice uptrend, you will want to add an additional moving average. Now, at this juncture, I would not load up on the stock, but I do have precedents of other names that have experienced this type of not only flat, but a base multi-month base breakout into a nice uptrend. We can take a look at a name from my MEM Edge report as precedents. This is Wingstop. We added it back here, and you can see the sharp advance. Now, it is certainly at this juncture due a pause, but more to the point is the fact that that uptrending period can remain in place. This MACD crossover is going to be your first signal that we are at the very least in a period of a pause at this point in time. Let's take a look at some other names. I did talk about biotech names and a very well-known biotech stock on the move last week. This is Vertex, VRTX, on very bullish news. Base breakout into a nice continuation rally, super high volume, not only on that base breakout day, but on the continuation. And you can really look at some of these better performing stocks, and you will see that their advances can often go on for a lengthy period of time. Let's take a look at another stock from the Nasdaq that is not in the Nasdaq 100, but part of the broader. And this is CoStar Group, GSG. and we can see the dynamic here with this cup with handle base breakout. I'll very quickly mark that up and share that with you. This is part of that move potentially into real estate areas given the reduced interest rate environment. So that is your base formation. When you are looking at that handle, it is a back and fill period. And then, of course, from there, we have experienced a nice breakout with constructive momentum indicators. And that's it as far as some of those Nasdaq areas that are outside of those heavy weighted names. What I did want to do from here is share with you, again, we talked about XHB. I'll share with you a name from my MEM Edge report as an example that has had a very sharp advance. This is Toll Brothers, and I'm pointing this out to you by way of from here pivoting into a small cap stock. I'm not sure if I mentioned it, but small cap stocks were up 5.5% last week. So we'll get into that. I'll share with you the Russell 2000 chart. But this is a company, Dream Finders Homes, and it is a small cap home builder that is just now coming into its own. It had a base breakout last week, nice high volume characteristics, and that MACD on the move higher. Likewise, always good to have historical precedent in a company that you're considering and noting that it can have this nice period of outperformance. Oftentimes that signals that there is a management team in place ready to handle the growth outlook. And on the weekly chart with DFH, you can see you are a lot earlier in that upshift in the momentum. Another area, the name that I did want to share with you, but first up, we're going to take a look at IWM, and that's the ETF for the Russell 2000, and take a look, a very sharp advance. Oftentimes, many people look to advances in the Russell 2000 being primarily attributed to a movement in small banks. And yes, there are a number of small cap bank stocks that are part of the Russell 2000. And I would say at this point, it's hovering around 17% of this index being attributable to those small cap banks. A very fertile area for those that want to participate. But from here, I will share with you some other small cap stocks that are potentially on the move higher, and they have the appearance of exhibiting the beginning stages of a downtrend reversal. First up here is SunPower, SPWR. You can see that we have broken back above this downward trending 50-day. But what caught my eye here is the fact threefold. One is we got heavy volume on buying over the last 2 days. In fact, it did move the MACD into positive territory. We already have a positive RSI, and take a look, that 10-day back up above that 50, indicating a golden cross. Now, for me, from here, I am going to dig down over the weekend and take a look at what may be driving it fundamentally. There's been a lot of this downside price action in SunPower, quite simply because solar power, the appetite has receded. So I'm going to want to know why. Is there a backdrop there that will continue to drive this stock higher? But technically it looks great. Another small cap name that we can take a quick look at. This has everything to do with that reduced interest rate environment. This is Upstart, UPST. And for those that are interested in very quickly from StockCharts.com, getting a quick read on the market cap and the group that they're a part of, you can go ahead and ask for that full quote, and it will say consumer finance. And they do, in fact, do provide financing and lending to consumers. And we can see this nice downtrend reversal with that nice shift into positive territory with the momentum. Last up here is a name that did have a base cup with handle base breakout already, but it does look to still have legs. FRSH is the ticker symbol. This is an AI-related software company, and we can see, I will just, rather than mark it up, just share with you. This is your cup formation. Here's your handle. And we can see that base breakout and then gapped up into a longer term base breakout. So potentially look for further upside here as we continue to see vibrancy in these smaller companies that are moving higher to the forefront in the face of a reduced interest rate environment. And from here, I will take us right to a viewer question of the week from last week. And I want to thank you for your questions. Always appreciate it. One of them was talking about gaps up in stocks and do these gaps fill? In my experience, we've been looking at a couple of names that have had these gaps up into an uptrend. When the gap, if it does fill, it is not good news. Oftentimes that breakout or whatever may have occurred after that gap up will fail if you see a filling of that gap, particularly if we are in a bullish period. Another question that came up had to do with the broader market indices, and in particular, this viewer was citing the fact that the MACD last week was heading downward while the RSI was continuing to head upward. And I did want to point out to you, of these two metrics for my work, the RSI is a much more impactful metric as far as being an alert or a signal. Oftentimes you will see the MACD waffle. This is a momentum indicator. However, it will not necessarily indicate that the markets are going to go lower. They will trend lower. It quite simply is indicating that this very strong uptrend that had taken place in this case prior to this pullback has receded. When and if the MACD gets into negative territory, that's when you want to pay attention. You can use that black line down through the red as a warning sign to help potentially keep on top of a potential move lower. But again, it will be that RSI's action around that net neutral that is going to be a more predictive and powerful indicator. Last up was a question relative to whether we will continue to see these mega cap names lag. And at this point in time, we certainly are seeing the group underperform relatively, but it does not mean that you want to look the other way. We can see, for instance, last week, Netflix was on the move higher after this significant, not significant, but after this pullback, and we are poised to re-enter a new bullish period here if we see that MACD crossover. Another mega cap name that fared well last week was Tesla. I would argue that we did see a flat base breakout in Tesla on very big volumes. So I'm constructive near term on Tesla. So in essence, it will be on a stock by stock basis. For instance, last week, Microsoft did stumble. We are now below key support, with this momentum shifting into downward territory, which indicates over the near term more by way of underperformance. So it's going to have everything to do with the fact that we are seeing monies flow into these newer areas, these oversold stocks. And yes, with that, you will see, I anticipate, continued by and large underperformance in these mega cap names as money flows into a more broadening out, which we've shown throughout today's show. And that's it for this week. Everyone have a fantastic weekend. I'm going to look for you again here next Friday.